Financial markets are again overwhelmed by risk aversion due to mounting recession fears. With every daily portion of macroeconomic statistics, analysts have to downgrade their negative forecasts on the global economy and raise expectations of more aggressive policy moves by the US Fed. Tonight, investors are alert to the minutes of the last FOMC meeting. What are the events which are due in the second half of the week will influence market sentiment? Let's discuss them in the regular calendar on InstaForex TV channel. On Thursday morning, traders will find out the information on Australia's foreign trade, a major commodity supplier to the second largest global economy in terms of purchasing power parity. For your reference, China still followed economic restrictions in May, with a view to stemming another coronavirus wave. Obviously, Australia should have considerably trimmed its export. At the same time, analysts expect a 0.1% uptick in Australia's imports in May, following a 0.7% decline in April. The trade data is likely to escalate pressure on the Australian currency. Later in the day, the market will find evidence of the negative trend in a report on industrial production in Germany. The forecast is pessimistic for the powerhouse of the European economy, as Germany's industry seems to be losing momentum on the back of the simmering Russia-Ukraine conflict that has shattered supply chains. The euro-dollar pair is expected to extend its downward move toward the parity level. Monthly data on the US labor market, which are due later, is certainly the focal point this week. On Thursday, the ADP payroll processor will release its employment report. According to market estimates, the US private sector added 200,000 jobs in June. Notably, last month, the actual employment growth was twice smaller than in the consensus. Experts point out a significant slowdown in hiring amid soaring inflation in the US. On Friday, the US labor market will unveil the official non-farm payrolls. Unlike ADP reports, government data usually comes in line with expectations. The US public and private sectors are projected to create 268,000 jobs in June. This dynamic proves healthy market conditions, meaning that the labor market is approaching almost full employment. Such information will reinforce the likelihood of more aggressive monetary tightening by the US Fed. Indeed, a robust labor market is the essential condition for the further rate hikes, with the aim of curbing inflation risks. Hence, the US dollar is set to assert strength. That is all for now. Subscribe to our channel to be always in touch with the latest news of economic market. See you soon.